Tell us about, I guess, the state of venture as we know it today, after the last couple of years of what I call mania, pre-money, right? Different interest rate environment, obviously, that's having an impact, and just overall venture as a whole.
I think I have a little bit of an unpopular view here, which is that the mania was a little bit of a mirage. Like, if you look at this data in the aggregate, yes, round sizes went through the roof, valuations went through the roof. But if you look at deal counts and you look at distribution of those rounds and you look at averages versus medians, what you'll really see is that all those headline numbers are skewed by a very small number of funds, a very small number of startup companies. And for the vast majority of founders, it wasn't any easier to raise. So I would say for the median founder, nothing is really that different. It's still really hard to raise money, and it's always been really hard to raise money. Of course, when you start to segment the market, if you look at, for example, growth stage companies, Series B and C stage companies that have raised hundreds of $millions before reaching product market fit, that is sort of an edge case, right, in the ecosystem. And it's very different for them now than it was 24 months ago. But particularly for pre-seed and seed, it sort of is, it's not that different from what it's always been. And if you look at, the data over a longer period of time, the trend line is still consistent. There was a spike for a small subset of those companies, but for the most part, everything is still up and to the right, and the opportunities are there. I think implications for a lot of founders who are just now going out to raise, there is less pressure to deploy capital. So firms are broadly going to move more slowly now than they would have over the last 2 or 3 years, because there is a change in sort of, liquidity going into fund managers from LPs. So we're not going to see, 1 to 2 year deployment cycles for funds in the short term. They'll probably go back to 3 to 4 years. Any of those, which again, I insist are sort of still the minority of rounds that got done, but any of those rounds that did get done at $50 million valuations at seed and $200 million valuations at Series A, to some degree, those are going to get scaled back because the entry points no longer make sense relative to the exit expectations now that multiples have come down. So we're expecting more of a reversion to the median there in terms of those valuations. So for founders, I think the principles of getting really organized in terms of building a pipeline of investors well in advance of a raise, preparing all your materials, being able to run a competitive process in a very structured way once you sort of have all those ducks in a row